glad that we saved the best for last. Makes me feel good. Good morning, everyone. I'm really happy to be here today. It's a good opportunity for me to have the floor and to give you a little bit of my perspective on where I see the business financially and what I've been up to for the last year. So many of you know that I joined Comet 1 year ago. So this is now my second Capital Markets Day. Within the past year, I really spent a lot of time, obviously, interacting with all of you, talking to the investment community. In addition, some of our other financial suppliers, vendors, banks, et cetera. Some of the most fulfilling things I really have been able to do in the past year is actually to talk to our R&D teams, to meet with our manufacturing heads. I've been able to spend time at our operations in Hamburg, Germany. I've spent time in our IXM and our PCT facilities in Switzerland, in Flamatt. And then I also did have an opportunity to visit part of our US operations. Hopefully this year, the world will open up a little bit more, and it would be a great priority for me to be able to go and see how we're growing in Asia. The third major thing is really been able to meet with our employees, really understand what are some of the processes that are driving our business. And with all of those inputs and then understanding the market, it's really culminating into how do we think about the financial model and where are our priorities then for finance. So let's jump into a quick overview on what our key financial messages are. So as you know, I think it's really important to point out that Comet is really a story about change and a story about growth. And if I want to really think about things in a very simplistic way, I like to think about things in really four main key areas. The first one is growth. Are we outperforming our markets? Are we executing to what we said we were going to do? The second is profitability. Are we growing in a sustainable way? Are we generating profit? Are we expanding margins? The third is, are we doing that efficiently? Are we really looking at our operating model? Are we generating leverage? Are we providing a good return on capital employed, a good return on investment? And then fourth is, how are we using our cash? Like I said, we are a growth story. And so the priority for us is to generate cash and to invest it back into the business. We do that through investing in research and development, and we do that through investing in CapEx. It is a priority for us to make sure that we are returning a dividend for shareholders, and I'll talk a little bit more about that as we go through the presentation. One thing I kind of wanted to just point out is you heard from each one of our division presidents, and they talked really about three things. The first was that, do we have the right product portfolio? Is it optimized? The second thing is best cost, and the third is time to market. And I think those are really three key threads that we want to make sure is infiltrated into our DNA, and therefore our financial strategy is supported. So let's take a look at each of these four key areas in a little bit more depth, and then obviously happy to address any of these topics further in the Q&A. So accelerating sales growth. As you heard Kevin say, each of our served available markets are accelerating. We have a terrific opportunity to perform not only in semi and electronics, but also in automotive and in aerospace. So I want to give a little bit of a flavor for how we're going to get from where we are today. The benchmark here is FY20 performance. We ended the year at about 400 million Swiss francs in revenue. And the expectation is that we are at 830 million by 2025. And how do we do that? Our plan is to get there organically. Let's talk a little bit about PCT. As you heard from Michael, we were expecting the growth of the market over that time to really grow at about 9%. We are expecting that our PCT division will provide, on average, about 19% growth until 2025. And how do we do that? Well, first of all, we know that we need to introduce the RF generator to the market. We know we need to continue to grow market share in vac caps. We know that we need to continue to enter with the Control Match 3. Then I think if you look at our X-ray systems, we have tremendous amount of opportunity there as well. The underlying growth of that market is 6%, but on top of that, we know that we have opportunity with electronic vehicles. We are also pointing more and more of our X-ray systems to the semi-electronics market, and that provides us with opportunity to growth. We expect that our X-ray divisions will contribute about 13% of our CAGR towards our ultimate goal for the group of 16%, and that helps us get to the 830. With all of that said, again, we have to outperform the market, and we need to continue to deliver strong execution. We need to deliver products that are solving highly complex technical problems for our customers, and I feel very confident about where we are today given the underlying economic conditions. All right, now with all of that said, we need to make sure that we are growing profitably and in a sustainable way. And the way we really look at this is we look at EBITDA margin performance, and we also look at our return on capital employed. So first of all, when we talk about expanding the margin and creating profitable growth, we really need to look at how are we actually performing in our production environment. One of the things that we need to focus on is lean manufacturing principles. The second is if you look at our X-ray divisions, it's really about how do we standardize the technology that we have? How do we ensure that we are not customizing as much as we had in the past, and that we are pointing that division towards profitable markets? The last thing I wanted to say is one of the key things that we're doing is Michael talked about, Kevin's talked about, I've talked about in the past, is the ramp up of our Penang facility. The Penang facility, as of now, is operating at about 20%. We expect that to be at closer to 60% at the end of 2022, and then we'll continue to invest and add in capacity using our asset-light approach to CapEx to get to where we want to go by 2025. The next thing I wanted to just touch on is really the concept of operating leverage and having a flexible, sustainable business model. We are a growth company. We are in a process of a lot of change. We do need to also focus on our processes. We need to focus on our infrastructure. We need to focus in our cybersecurity. Obviously, it's no secret to anyone that cybersecurity and making sure that we have a secure environment is very important, especially to a tech company. So we will continue to look at those things and invest it accordingly. I'll talk a little bit about how we think about R&D and CapEx on the next slide, and talk about a little bit how do we think about where we deploy cash. So what I wanted to do here actually is just give you a historical perspective about where has our cash gone over the past 5 years. And the reason I'm doing that is because actually our trajectory will not change significantly from what we have here. And I think that's important to note. We will always prioritize investing back in the business. On average, we have invested about 12% in R&D. We continue to see that go forward. We, on average, on capital expenditures, have invested about 4% of sales in CapEx. Just a note for you that this does exclude the facility in Flamatt that we spent about $52 million on. But on average, 4% of sales is how you want to think about this going into the future. Providing an annual dividend to our shareholders is important. Over the past 5 years, we have provided a dividend of above 1 franc at the minimum, and on average about 1.20. I think you can expect that we'll continue to think about a dividend payout ratio of around 25 to 45% going forward, and we will work with our board of directors to provide guidance on that on an annual basis. So overall, really, the story is on the capital allocation side. We want to make sure that we are maintaining a strong balance sheet. We want to make sure that we are flexible, and we want to make sure that we have the cash to do what we need to do to meet the ever-evolving technical needs of our customers. So as a quick wrap-up, we Comet, again, it's a story of growth. It's a story of change. We're focusing a lot on the culture. We're focusing on outperforming our markets. We're focusing on best cost. We're focusing on making sure that we are prioritizing our investments in the right areas, in research and development, in our employees, and in an asset-light approach to capital expenditures. And overall, we feel that we are very well positioned to capitalize on the opportunities that we have available in the market to us by 2025 and beyond. So looking forward to the Q&A.